Today is May 1, 4:22 p.m. Market is closed, and we wanted to update everyone on Apple unusual option activity because today we saw something very unusual. And since we're tracking Apple for the earnings that is coming up this week on May 4, and so let's get right into those very large unusual options. You'll see here, this was done right near market closing. And so just about less than an hour ago at 3:34 p.m., you'll see these May 19s, these 185 strike calls, 37,026 of them. And what does this mean? Well, it could mean a couple of things. And so let's go over that. When we look at the options chain, May 19, you'll see here this has a lot more volume here than the open interest. So those 37,000? Yeah, much greater than the current open interest at 20,000. So we know those are opening orders at this 185 strike calls. And so we know that they are opening this, and if they were to buy it, it would be going, well, what they did, it was about 30, right? The transaction price is 30. We don't, the color does not mean that they sold it or bought it. It doesn't mean that. If you want to know a little bit more about what that means, we'll put a link up here on what the colors mean. And if you have info cards turned on, you could watch that video. For the 30, we know that since this spread is quite tight, the 30 does not necessarily mean sell or buy. And so let's kind of take a look at this. If they were to sell this, if they were to sell it, they would then be naked on there'd be a -1, right, on the contracts. And to do something like that, to sell a call on the 185 takes about 1,800 buying power per contract. If you also want to find out how to calculate this, we did this prior hand, a video on how to check the buying power up here. You can also take a look at that video on how we determine that. And so this amount per contract, and since we have 37,026, that requires about $66 million of capital to put on. So it's quite a large trade, extremely large actually. So that's one case. The other case scenario is, let's say they bought it for $30 each, right? How much would that be? $30 each, 37026, that would be $1.1 million. So either way, it's at least $1 million. We are leaning more towards the selling. We think they are selling it. It's most of the time, large institutions before earnings, they sell options because the volatility is higher and they get a premium for selling it. What we think they're doing is they are actually selling a covered call. So it looks something like this. Here it is. It's called a covered stock. And so you'll see here, this is the sell on the call here. That's why it's a -1. And they have 100 shares of Apple. So what happens is, this is what it looks like. It is still bullish because they have 100 shares of stock. However, if you don't take into account those 100 shares of stock, and you were just to look at it and say, hey, maybe they just sold it for the 30 credit, then it would look something like this. It would look not bullish, right? They would just collect their 30 as long as the stock is still below 185 at expiration. They get to keep their 30, right? And so that if you don't take into that stock into account, though, if you just look at the unusual options tape, and you may think it's just this 185 strike call selling it, and that it could be moderately bearish and just collecting this premium. However, this is not so bearish because the price can actually go all the way up to 85 and still be profitable. We think it's more of a covered call. This is to reduce their risk on a potential drop in Apple. So therefore, you'll see here when you do a covered call, this their break even actually moves down. Well, let's kind of look a little closer. You'll see here that at expiration on May 19 here, the current price of Apple at 169, their break even is actually lower, up to 169.3. So it had lowered down their break even. This is how they can hedge and reduce their break even points. And so we don't know how much they had bought Apple for originally, but we know that by selling that call helps them reduce their risk, so they can collect some premium out of this high volatility event through earnings. Because if we look also at 180, the price of 185, the likelihood of this breaking 185 is actually not so high, because it, even in a year time span, it hasn't broken it, right? Apple's last high was back in August 2022 at 176. If we zoom out even more, 3 years out, you'll see here its all-time highs is at 182.94. This was in about January 3rd, 2022. So this is, it's never hit 185. And so that's another thing to take into account, that this is why the 185 is most likely being sold, and it's a way of collecting premium for the high volatility because of this earnings event. Okay, so that's our current analysis of these unusually large contracts at 37,026 of them that we saw right before market was closing. We'll continue to monitor Apple as we approach earnings on May 4 to see where we're headed. We're currently still leaning towards a bearish position, and if anything changes, we will let everybody know. So make sure you are subscribed and you have the bell icon turned on to notify you whenever we put videos out. And so good luck, everybody, and please smash that like button. Helps our channel grow to put more videos out whenever we see unusual option activity. Thank you and take care.